Yo guys, what's going on? Welcome back to another weekly forecast. And by popular demand, I was told to sort of do some more gold analysis. So I'm going to start off by analyzing gold and give you a quick forecast from the higher time frame on gold. Then I'm going to quickly run into NQ, mark up the charts, and see where we are. So without further ado, let's just jump straight into it. So we have the gold chart right here, and you notice that there is a blue box that are marked across here, and you can see how price has been referring to it throughout the whole of last week. This is a key point of interest which I was using to either identify whether price is bullish or price is bearish. Notice how price is sort of dancing around it, which tells me that we are not in a key sort of proper order flow. It's just trading the smaller time frames is how you would have traded these sort of moves, but nothing in the high time frame, which is why a lot of traders struggled trading gold last week. But the reason why I marked this level is if you notice that this was the prior weekly high on the week before, right? And the candle that broke above the prior weekly high, we then see, did it create a fair value gap? So you can see that this candle on Monday at 11 a.m. closed above the prior weekly high, and it created a fair value gap. So this is a key time-based liquidity level, so right, TBL. It's a key fair value gap. And a lot of people say, which fair value gap do I use, bro? Like someone would have been marking out this fair value gap. It still was used anyway, but I'm just trying to say that these are the key ones where you hold them higher than the other fair value gaps, right? So this is a key time-based liquidity level, right? So I'll mark this out and I drag this across. So whenever price taps back into it, I'm anticipating, because it's a retracement, price should use it as support and push price up. Notice it's a bit messy here where price closed in outside, but then as price sort of closed back outside here, we then used it as as support to then push price higher, taking out that daily high. And that was a potential FOMC trade, which I think I called out live as well, where if you see what occurred here is that price immediately closed back outside the blue box. Any retracements in here would have been opportunities to buy, right? Knowing that order flow is now bullish, you would have, sort of got an opportunity in here to buy this trade, and then where you're targeting. Because this was your accumulation, you can see we had manipulation, and then the distribution is supposed to continue to the Asia high and then to the prior daily high, which is what happened with FOMC, as price immediately pushed to the prior daily high first, and then obviously we ended up reversing back down, but then your trade would have been done there. But with that then done, price then immediately pushed back down and closed below. So any retracement here would have been opportunities to sell. So you notice how I'm using this to identify which way price is going. Now what happened on Friday? Price immediately closed back above the time-based liquidity level, telling me the price is now bullish, right? So going into this week, if we mark out the prior weekly highs and lows, which helps us gauge where order flow will likely be heading, that's the prior weekly high. And then on Thursday, we end up creating, I believe, was it on Sunday actually? Yeah. I'd use this level here because that was a Sunday low. There's a prior weekly low. So with that there, you can see that because price is above this blue box, you can use it as support to push price back up to the prior weekly high. And that is what I'm anticipating in a potential market maker buy model, right? But what we also have is we have tons of liquidity below here, so I'd be careful that if price does close back below this blue box, we're definitely likely to be heading back down to the prior weekly low, right? But order flow is the majority is bullish, so I'd keep an eye on that, and I'd keep continuing these bullish sort of expansions where price will likely continue higher. So that's your key point of interest. I'd use that for this week as well. Any retracements into it you can use as reversals to then push back up to the prior weekly high. Once the prior weekly high gets taken, then we need to see if there is another time-based liquidity box that is formed, and then if price would like to use that once we're above here to push price higher. So you can always sort of use a similar sort of concepts, but anticipate for what price is about to do in the future. So that's pretty much it from gold. Keep that as a higher time frame, keep it nice and simple. That's all I advise you guys to do. And let's switch over to NQ. So what happened? NQ, it's just been flying, right? So we have this key time-based level which I used where price broke out above the prior daily high, and then you can see once price pushed back into it, we ended up buying here and then taking this move. You can see there's the marker. But if we sort of use the same sort of concept where we mark out the prior weekly high, which was back up here, prior weekly high there, and then we mark out the prior weekly low, which I believe would have been the FOMC low anyway, so it's quite a large range week that we had. I don't think that price will get to the prior weekly low next week, highly unlikely, but we can never count it out, right? So you can see that this was the prior weekly high and the prior weekly low here. Now we're trading within this range, and in this range we need to start sort of marking our PD arrays. So you can see here on Friday at 12 o'clock, the candle immediately created an inefficiency here after taking out the prior daily high, which was the Thursday high right there. You can see that that candle closed outside Thursday high, creating an imbalance. So this has now become my key PD array, right? The time-based liquidity level, which I'll be using for this week. As long as price stays above this box, we then can anticipate that price is still bullish, right? If price wants to continue pushing higher, then we're likely want to see that is there another time-based liquidity level created within this expansion here to hold price up and to continue higher. And then obviously if it does break this box, then we're likely to see price expand back towards the next time-based liquidity level, which needs to be filled. So we can use that to anticipate that price needs to be rebalanced efficiently, and that is basically what IBDA's job is, to ensure that price is being delivered efficiently. So with that, I'll just keep it quite simple on this one, to be honest, because we're bullish order flow. I anticipate to continue being bullish. So if price wants to retrace, we'd anticipate to price to continue. If you go and check Forex Factory and have a look at what we're likely to be expecting next week, Tuesday we've got some news. Thursday, Friday we've also got some news. Chair Powell speaking at 5:35 or at odd time. But yeah, that is something that I'd anticipate and look towards trading Tuesdays, and then missing Wednesday because you've got final GDP and unemployment claims, and then just going heavy on Thursday, Friday to see if we can anticipate some clean expansions with the news. So that's pretty much it from the weekly forecast. I'll keep this one nice and short. I did release another video just before this one, so be sure to go check that out. It's how we managed to catch a trading FOMC live. But with that we'll sort of end it there. I lost my sort of train of thought there, but it's been a waste of FX. Hope you guys enjoyed this video. I hope you guys use these going into next week. Don't forget to subscribe, like, links are all in the description to the free channel. Yeah, it's been a waste of FX. Peace out.